Last time on Colony Confidential.
So when is this bubble going to burst?
I don't know, man. If I knew that, you and I wouldn't be chatting right now. I would clearly be doing something more lucrative. I don't know. It's one of those things where, in my mind, I feel like central banks around the world are really boxed in. They can't normalize monetary policy. And I think it comes down to they're going to be forced to make the decision where if they normalize policy, they blow up the economy. If they don't normalize policy, they end up kicking the problems upstairs to the sovereign level, and then it becomes a currency issue. And I think that's ultimately where we're going. It's not 1981 or 1982. I know, Joe, you and I were eating Play-Doh and shitting our pants back then. But Ed, you remember the late 70s and the early 80s when Volcker came in and elected, and you had the 81, 82 recession. And he said, there's got to be a lot of pain because we've got to purge this system and we got to get rid of this double-digit inflation. And we had the deepest recession in 81, 82 than we had since the Great Depression at that period of time. But they worked the inflation kinks out of the system. And as you'll recall, by the 1984 general election, it was, what was that quote? Morning in America. You remember that?
Yeah, I do remember that. It's Morning in America.
Yeah. So I don't know when this consolidation bubble blows up. I used to try to prognosticate. Now I just realize that I really don't have any idea. So I just look at what's going on in the here and now. And for years, I was never the guy to say, hey, it's a seller's market. You got to get out now. I was always really just focused on monitoring the situation and trying to help our clients make the right decisions for them.
So just real quick for our listeners, if you can explain what you mean by bumping up to the sovereign level, just because some people, including myself, may not fully understand that.
Yeah, so here's what I mean by that. So in the United States, since the Paul Volcker era, and Volcker was the chairman of the Fed from the late 1970s into the 80s when Carter and then subsequently Reagan was president, the Federal Reserve since that time has quote unquote tamed inflation. But the problem that we've had in the United States is we've gotten to a point where the government doesn't like to have recessions. And so whenever there is a problem, if you think back to what Greenspan did, whenever there's a problem, you've got a kind of recessionary pressures in the U.S. economy. The Federal Reserve loosens monetary policy, which means they create bank reserves, they lower interest rates. And I've often viewed a recession is a result of a boom, like in a boom-bust cycle. And so the recession is what ultimately cleans up and purges the economy. When you have business owners that make bad decisions based on the projection. As an entrepreneur, what do? You try to allocate resources, labor and time and land and capital, and you create a business and you try to serve needs. Well, over a period of time in kind of inflationary booms, entrepreneurs make a lot of mistakes, and the recession purges that. That cleans out crappy businesses. It cleans out bad decisions. It makes the economy ultimately stronger where the fittest survive. And so what has happened over time is, if you think about the 90s, you think about, you had long-term capital management. And this is probably what not a lot of listeners know about it, but there was a big hedge fund back in the early 90s that almost brought the global financial markets to its knees. And Chairman Greenspan responded to that, dramatically decreasing interest rates, which blew a bubble into the tech bubble, right, of the late 90s. Now we got the tech bubble. So that thing bursts. And when that burst in early 90s, then Greenspan came in and brought interest rates down to 1%, which drove money into the real estate market. And then we have the real estate crisis. And so now the real estate subprime market busts. It trickles into the greater economy and the banking system. We now get almost 0% interest rates and quantitative easing. And so with every subsequent crisis, we lurch from one crisis to the next, and the government creates more and more money to kind of paper over that because they don't want the pain. And so every subsequent crisis is worse. So what I mean by that is we went from a stock market bubble, we kicked it upstairs to a housing bubble. From the housing bubble, we've now kicked it upstairs to the sovereign level, which is government bonds. So we're kicking, every time there's a crisis, it gets larger and larger proportion as the government tries to central plan and control this instead of letting market forces take control of the situation. So I guess that's what I'm saying. And I look at the stock market right now, it's so overvalued. It's one big carry trade. If you look at it, it's almost as if people now, you can't get yield. You can't go to the bank now. Well, you put your money in a savings account. What's your interest rate? It's close to zero, right?
1%.
So you got everyone using now the stock market like a bank account, right? So that's what we're doing. We're actually, equity is now becoming money. And so it just increases the risks in the overall greater economy in the market. One thing adds to the next. So at some point, there's going to be a crisis, and the crisis will be at the sovereign. It'll be at the U.S. government level. It'll be at the currency level. It's not going to be at the stock market level. It's not going to be at the real estate level. It will ultimately be at the bond level, the U.S. credit rating level. And I have these conversations, and everyone says, Paul, you're a kook. Not everyone, but a lot of people say, hey, you're a kook. But I just look back in history, and when has this not occurred? Look at all the sovereign powers that have gone in and out over the years. The U.S. had a great reign of 150 plus years, but the government's doing everything in their power to really screw this up, I believe.
Currently, the U.S. government is Blackberry. Blackberry was amazing. Nobody could touch them, and they got so stuck on stupid. They never changed with the times, and nobody uses them anymore.
Yeah, that's true. I've seen one Blackberry in the last 2 years. So,
I love Blackberry so much, we held on far too long.
I did too.
And now we have iPhones, and the technology has come so far, but I would liken the U.S. to a Blackberry. We're not changing with the times. We're not adapting them. This whole bailout fucking situation on a regular basis is ridiculous, like you said. And anyway, there's so much to talk about. I enjoyed your episode with the guy Profit First. So shared what they spoke to an author and a serial entrepreneur, from what I understand, and he spoke about profit first and what a lot of us entrepreneurs and small businesses do. I'm just going to recap it real quick. So what a lot of us do is we have these great profits year over year, and what do? We don't take them. We dump them back into the business because we think we're building the business. And his model is, at your banking level, where you have your bank accounts, is you have your operating account, you have your sales tax account, if you will, you have your profit account, and the profit comes out first. And this also goes down to knowing your numbers. If you know that you're at a 10% net profit, then almost and given today's banking, you can automate 10% of every deposit goes into this account. And if you know that your sales tax is roughly 8.5%, 8.5 goes into the sales tax account, and then the rest goes into the operating account. So you always have your profit separated, because we don't really do that as small business owners. It was great listening to him. I'm ready to buy his books. And did you ever do that, Ed Sheehan?
If I understand what you're saying, yeah, I took my cut. But it seemed like every 3 to 5 years you had to retool some stuff, so you put in money, but it was always my share, and it was always on the side. And some of it went in at the time into saving account when I first started. And then I found out I could get this Vanguard Ginnie Mae, paid like 2% interest, but it had, it was checked right. I could get the money in a hurry out of there. And I used that when I acquired other routes or other companies and stuff. There was always that money. So yeah, there was my money, and then there was the piggy bank money, and bills got paid every 15 days. I was on top of that.
I prepay taxes. I pay taxes through this. You pay taxes all the time. And I usually wait until around now to take any real distributions, just to see what's going on. And I did tell myself this year I'm going to take a dollar amount every month, but I still can't pull the fucking trigger, which is it's just about retraining myself and saying, if I know I'm doing, let's say we're doing 18% profit, then part of my thought process is I'm going to definitely take 10 every month. You know what I mean? But it's just hard pulling that trigger when you were I was raised, Paul, the complete opposite of this. Everyone gets paid first, right? Pay
Yep.
your team, pay your
Yes.
employees, pay your bills, pay this, pay that, and pay yourself last. And
Yes, but then they said, make sure you pay yourself first.
but that was ingrained in us. So it's been a struggle probably over the past 5 years to correct it. But I'm working on it. I'm going to read those books.
Let me ask you. So I had been gifted. So some folks had sent me a couple of his books, and it's interesting. I have a lot of books in general, but people are often sending me books. And so I got Mike's books. I read them. Now, Patrick had known this guy for a long time. There's a lot of guys in the pest control industry that have used this profit first system. I didn't know much about it. For me, I think it's gimmicky, but at the end of the day, like if gimmicky works, then who the hell am I to judge? And I do think, so what you were saying, Joe, and here's the way that I understand it. This guy basically tells every business owner, you set up those 5 accounts, like you just said. You've got your tax account, you've got your own profit account. So you're taking profit out and you determine what your profit margin is. And on a monthly basis, or, as you're depositing stuff, you separate that out. I think it probably does get people more focused on wisely spending money, because I just think about my own personal life, right? I got my checking account, my credit cards or whatever. I'm just blowing money. If I had a finite amount of cash that I really had to budget because I knew I was taking my profit out, it really gets you focused on, okay, do we really need that 60-inch monitor for the spare room in the office that no one ever is in there? Do we need this shit? So I can see how that works. I'm interested to see if you read that book and if you actually start to implement it, because I'm curious.
Yeah, I like it. I wish I knew about it in the very beginning, because I feel like now we're on a different playing field, and not
Right.
that it wouldn't be. I still think it's beneficial for me to read it, and just because you never know what you get out of it. But I think from the very beginning, it would have been very helpful if I read a book like this and was like, okay, this is smart. And it's funny because I did one piece of this from day one, sales tax. I deducted sales tax on a regular basis in QuickBooks because of how tight money was in the first 2 or 3 years. And because I'm huge on balancing my checkbook. Do you still do that, Paul?
No.
Right. So I do it personally. Obviously, in a business, you have to do it through QuickBooks or whatever you use in Netscape, or you have to do it. But I was huge on it, and I was so pissed every quarter when the account would be like, yo, X 3,000, whatever it was in the beginning, 3,000, 2,000. And I was like, oh shit. Literally, it was on a quarterly basis. I had those oh shit moments. And then I just started taking it, deducting it, and me and the accountant had a conversation. We labeled it correctly in QuickBooks, and at the end of the quarter, he deleted all those and just made it the one payment.
You're right, Joe. I mean, like sales tax, especially in the state of New York, is something you can't mess around with. If you're not going to pay your estimated IRS taxes, a big deal. There's a penalty or whatever. But in New York with sales tax, that is a big deal. Yeah. And they make your life miserable. So that's one that gets paid first, right?
Yeah, but that was one thing that I did from the beginning, but I never thought of the profit. I just thought I got to keep this thing going till I get to a point where I could focus on finances.
Yeah, that's good.
So
I think you're right, though. I think it's probably really a good system for guys that are just starting out, because I always say you don't need a very complicated financial system when you're like 5 guys, right? You don't need all the P&Ls and balance, all this kind of jazz. As you grow bigger, you need to have a real financial system. But profit first, that system is literally a step up from the old-fashioned, the way Ed used to do it with the cigar box. When money would come in, he'd toss it in there, pay the bills. And yeah, it's a step up from that. And it's probably all you really need when you're small.
Yeah, I think it would really help. So
when are you guys coming down to Puerto Rico? We like to do buzz sessions live. So we've had guests come down here, sit down in the office. We want to be like, what's that guy out in California? Rogan. How got cigars or cigarettes on the table, some drinks. So when you come down to PR, Joe?
This guy's got the busiest friggin' schedule, so it's really up to him. But listen, I'd love to come down to Puerto Rico. If the Mex is there, I'd like to meet some people that I've heard of and never seen.
Yeah.
But yeah, listen, come to Puerto Rico for a business expense. Sold.
That's what everyone. We have people down here every other week, and that's what they do. It's basically a business expense. They take their family down there. We've got water parks and all sorts of. Your kids would love it. Your kids are what, like you told me before, late
11 and 9.
11, not. I mean, it's perfect. There's parks and beaches. There's the jungle. There's all sorts of stuff.
It's funny because a friend of mine wants to start investing on the other side in Aguadilla because he's got family there, and he just said you could get stuff for 30, 40 grand. I'd be interested to see what it looks like at that price. But
there's a guy actually who's in the industry, owns a business in Virginia. He moved to Aguadilla last. So he's got a business doing 4 or 5 million in revenue in the industry in Virginia. And he's out in Aguadilla, and he's been buying like foreclosed property. And you're right. You can go out and buy a $150,000 house down there for like 25 grand. So there is a lot of opportunity. You just got to be willing to do the dirty work to get it done.
yeah. Shia, do you want to ask any questions there, Mr. America?
Yeah, I'm always looking for stock market stuff. Before you were talking about in December, you were talking about metals and other such things, and oil was one of them. Very interesting today with the inflation. I've been saying that for a while, but I don't know. Any new outlook on the market other than what you said last December?
So, Mr. America, you might not have known this, but hey, Joe, do you know the disclaimer that I give on the buzz? If you take my advice and then sue me if you feel like I've damaged you, what you need to do. Have you heard that?
Yeah. You have to say something like "I have a small dick" or something like that, right?
Yeah, you gotta. If you sue me, you got to stand up in front of the jury and swear under oath that you've got a microphallus.
Microphallus.
If you're willing to do that, Ed, I'll tell you. Now, so for me now, when you and I talked, I was heavily invested in copper futures and crude oil. So that's what I was in. Now, I have lightened up a little bit on crude. I do think at some point in the next 18 months, we are probably going to see $100 plus per barrel. So I think crude will continue to be a good bet. I have purchased a lot of corn and I've sold it. So basically, I think that there's going to be price inflation in the agriculture space, particularly food and grains. Light on copper now. Actually, I'm 100% out of copper. I'm looking at, I think gold has traded down significantly since its zenith last year. I think at some point gold will be a very interesting long. I just don't know how I'm going to trade it yet. I might trade it with options, basically doing a straddle as opposed to going long. You could go long GLD, which is the gold exchange traded fund. You can do that. You can go long the GDX or the GDXJ. Those are the gold miner ETFs. The problem is those are very volatile. And if we see spikes in 10-year treasuries, I think gold potentially has some more downside. I'm trying to think about that. I think we're on the pest control side. I think that both Terminix and Rollins are going to report very solid Q1 earnings. And I don't think the market's really going to react. I think that the market's going to sigh, and I think they'll continue to trade sideways. I think last time we talked, Anticimex was barreling down on an IPO. It was supposed to happen in March. It was pushed. I think personally that's related to the fact that Anticimex had a great Q1, so they wanted to make sure those numbers get in the books. I also think the market volatility in March slowed that down. So I'm long on a ticker IVOL. And basically that's a fund. It's an inflation hedge of different government securities. I like it's continued to perform well in 2020 and 2021. I wouldn't go very heavy into that. The main ticker I've been playing is XLE, which is the energy ETF, exchange traded fund, XLE. That's a way to get exposure to oil, gases, and other energy type stocks in one ticker. I think that probably has some significant room to run. It's selling off here over the last couple of days, but I do think that XLE is trading at $48 a share now, almost 49. I think by the end of the year, we're going to see XLE above 75 or 80. That's what I personally think. And by the way, this isn't investment advice to others. This is just me talking about my own portfolio.
Yeah, shoot the breeze.
Disclaimer to everybody listening. These are just opinions of everybody, myself and Paul. And if you choose to follow it, it's your own undertaking. And don't call us, don't yell at us, don't say anything.
And more importantly, don't sue us.
Right, well. So did you get into lumber? That's the price of lumber now. Did you?
I did. I was buying lumber last year. I basically, what I started to do is really look at any sort of, I lost money in orange juice and coffee, any sort of really commodity. Because really what you're doing is you're looking at anything that would trade inversely to the strength of the US dollar. We've had some recent US dollar strength as yields have spiked up. But I think from a long-term perspective, I'll tell you, the majority of the money that I made last year was trading ticker TLT, which is the long bond. It's the US 20-year, it's the ETF. During the financial crisis, I went super long, the long bond. And then on the way down, I've been shorting it. So this year I've been short the long bond. And that's been a very good trade. I think lumber, for at least, lumber's been up, like 20 some odd % in the last 2 or 3 months. So I don't know how much of a run. Copper's been up, so I'm off copper as well. So for me, I've cleared away all the distractions, and I am pretty much just focused on oil over the next few months. I can't look at a lot of things. I'm not one of these guys I'm not like a day trader guy that sits down. I try to think through my investment thesis, and I try to go long, and if my trade works, I continue to scale in until I get massive positions, and then I scale out. But I can't look at more than 2 or 3 things at a time. Not like you, Ed. I'm not hanging out in Florida, smoking cigars, drinking scotch, trading stocks.
No, Jameson's no scotch. The other stuff is pretty much on the mark.
So Paul, on that networking thing that I was on today, one of the builders, contractors said something very interesting. Amazon has bought 25% of the market in regard to building materials. And they are struggling to get projects done, like independent contractors, to the point where he created a consortium. I don't know what the proper way to say it is, but he created a group to buy the materials up front, and but Amazon, 25% of the market in those raw materials. He wasn't specific exactly what it was, but I know he mentioned iron and something else. I didn't hear lumber, but you think about that, like Amazon, are they pigs or are they hogs?
I guess we'll figure that out, right? If they get slaughtered or not. But no, I think there's going to be, with the infrastructure spending we've got going on in the United States, as well as globally, there's going to be a lot of make work projects. There's going to be a lot of money chasing limited resources. For me, I am definitely going to be long commodities. I personally, again, this is just me, in my opinion, I personally think that there's going to be, over the next couple of years, there will be a lot of money to be made in commodities and a lot of these base metals. I think copper will have some room to run. I think that for me, though, there's a lot of convexity in oil. I'm not like a Bitcoin guy. I don't own any cryptocurrencies. For me, cryptocurrencies feel like the 2000 technology stock market bubble. I don't think there's, quite frankly, I should have owned crypto. Like I looked at myself and say, why didn't I put a few bucks in crypto way back in the day? And I noticed in the pest control industry, guys, there's a lot of guys that are really into crypto now. Are you seeing that as well? You got buddies? Is your buddies like Carmen running around? Is Carmen buying crypto?
So not like you would think. Carmen, and Jeff King, and I know that you did some work with Jeff. We have our own networking group that eventually will probably be on a much larger scale. So we talk about stocks all the time and crypto, and we go back and forth, but they're not that invested in crypto. I probably have the most. I got into Bitcoin in 15, 16. I'm not completely out, but what I did in the beginning of this year is pretty much made sure that my entire stock portfolio is house money. So I pulled everything out of Bitcoin. I pulled everything out of blockchain. I pulled not everything, but I pulled all of my investment with like 10 to 20% return on it. And I got added some of TPL, Texas Pacific Land Trust, which is we got in at 300. It's at 1,600 now. So I just sold.
It's going to run?
Not according to what Paul just speculated on about I think the kid that gave us that and what he said, it's a stock for your grandchildren's grandchildren.
Which stock was it, did you say?
TPL, Texas Pacific Land Trust. It's been good to us, obviously, if we got in at 340. But that was just my plan. And now I have still a good portfolio dollar-wise, and I'm just waiting to see what happens before I buy anything. Yeah. But I do think that the commodities, like you're saying, is the way to go because the housing market, with you and I both agree, is overinflated. I looked at a house on Monday, beautiful, no gutters on the roof, obviously needs to be replaced. If you just fixed it immediately, probably 30 grand in a normal market. But now it's probably 60 because of the price of lumber and everything else. They already had prices over asking. I said, all right. And they said, so what do you want to do? I said, my price remains the same until midnight tonight, but the house is sold. And what you're going to see is either it's going to burst and then I'll be able to get this house for 480, or they'll put the money into it. And like you said, the commodities still go up. I think you're going to have a little bit of both.
Yeah. And I think for 2021, there's just so much government interference in this market that this shit's going to run. I think the second half of this year, everyone's going to be feeling real good about everything. Things are going to open up. We're going to have screeching stock market. We're going to start to see increasing inflation. And I think it'll feel really good from a financial perspective. The question is, when's that bust going to happen? And when that happens, that's going to be for real. And I don't know if it's a year from now or 3 years from now or 5 years from now, but anyway.
Yeah, we could go on and on about this, but last question, if you will. The scary thing, I think, is like you have all of these people using the stock market as using the equity as wealth, if you will, or as real money, which it's not. And they're not savvy enough to know to hold on the dips. So it could be like a perfect storm, right? When it really dips bad and there's no money and all of these morons don't know where to pull. They just pull everything. Do you think that's a real possibility?
The issue with the stock market today is, and I hate to even use the term carry trade because I know we don't have a lot of traders listening to this, but it's one in which there's a serious potential for liquidity issues in the market when it's almost like you go into a bar and it's 8 or 9 o'clock and it's not that busy and you've got like 10 or 15 people there. Shit hits the fan, everyone can run to the exit and get out. But you go into a bar and 250 people are packed into it and you got one exit door and shit hits the fan. That's a train wreck. Not everyone's getting out. And so you start to see now margin debt as a percentage of GDP is an all-time high. And what that tells us is that there's a tremendous amount of retail investors in here. And when shit hits the fan, liquidity, the more margin accounts there are, the greater the likelihood is for liquidity issues when shit hits the fan, Joe. And so it's like the crowded bar, right? Only so many people are getting out that door. And I don't know, this reminds me back of 2000. There's a lot of people that are playing. I'm like, you're playing the market with the house's money. I'm not a big speculator personally, but you talk to people, and I know some people who are literally all in on this, man. These guys got Bitcoin and they're all in long on everything. And I don't know, it scares me because I'm all about not being poor. Like, I want to go completely bust. Like, that's not what I've worked so hard to do.
Not being poor. When I had triple bypass, so this traveling nurse comes, and my daughter's there, and the nurse says, she's asking a lot of questions. She goes, "Do you have any allergies, Mr. Sheehan?" I go, "Yes, I'm very allergic to poverty." My daughter cracked up laughing. The woman smiled. She was okay.
Wow.
No, it's true though, and I think that's, you either have the propensity for that risk or you don't. And for me, I bought Ripple at 24 cents. It's at $1.75. So what did I do? I pulled out my 25 cents of the amount I shared, and now I don't care. I don't have to look at it. Like, very much like you, I could focus on something for a solid 20 minutes and then jump to the next, but I can't focus on it all at the same time. And the stock market for me is okay. Now I'm good. I literally don't have to look at it, because if I lose all that money, not that I want to, but if I did, I would be exactly where I am right now. It's not my money until I take it out. And the money that I actually put in, I pulled. So I love working like that. It's the house's money. I do the same thing when I gamble. If I win, I have X amount to spend. And if I win, once I hit what my spending was, I put that away and then I play with the house's money. I don't know. But listen, Jesus, Paul, we're either coming to Puerto Rico or something because fuck it.
Guys, my next pass up through New York, we'll get together. We'll do this. I'll probably be in New York in the next month or so. I'm going to probably
hit us up.
Mr. and Mrs. American, all the ships at sea. Ed Sheehan for Colony Confidential. Just spent an informative half hour and a lot of stuff to think about after this one. Mr. and Mrs. American, all the ships at sea. Till we meet again, God bless you.
Ladies and gentlemen, it's Joseph, formerly Joey Buns. Again, always a pleasure speaking with Paul from the Potomac Group. Make sure you go out and listen to the Boardroom Buzz. I could name 10 of the episodes, but go pick your own. Always informative. Remember the disclaimer, anything that you heard here, any financial stories or what we were talking about that you decide to act on, we are not liable for whatever happens. Again, Paul, thanks, man. I appreciate it. Your podcast is awesome. I'll tell him, Patrick, hello. We've never met, but hopefully we will soon.
Yeah, I'll connect you guys. And listen, thanks for having me on. I always love talking to you guys. Look forward to actually getting up and doing this in person.
All tools are not made the same. We need digital learning made to suit the pest management professionals. Simpler, friendlier, nice, less intimidating. Find it out only on Knobe. That's GNOWBE. Set up a demo on their website today.